Hi guys, in this episode, we're going to go through house price predictions out for the next 4 years, out to 2029, 2030. We're going to go through which city has the most chronic undersupply. I'm going to share with you this brand new data. We're going to go through mortgage arrears and what they're likely to do. We're going to go through the incredibly high amount of household debt per GDP that Australia has compared to other parts of the world. How on earth can house prices keep rising? Surely people can't afford them anymore. But we're going to go through the data systematically so you can make sound property buying and selling decisions. I promise you, you'll learn a lot, as did I when I was researching these charts and graphs. Welcome to the Oz Property Investment Mastery Podcast. My name's PK and I help busy people build passive income by buying top 5% growth and cash flow property and build a portfolio using data without wasting months doing research, spending weekends at inspection or catching flights, or dropping $10,000 to $20,000 on buyer's agents every single time. So if you're confused, lack confidence, and just overwhelmed with all the information and marketing misinformation available online and don't know where to start, then this show is for you. I'm going to start off by sharing a mind-blowing fact. The fact is that 7 years ago, Australia had 80,000 properties listed for rent and 319,000 properties listed for sale. Now, the population is 3 million more, 3 million people more, and the number of properties available listed for rent is dropped to 37,000, down from 80,000. That's a 54% drop. And those that are listed for sale are 239,000. That's down 25%, down from 319,000. Suffice to say, we have a massive supply issue. There's just not enough properties for everyone to buy and rent. And that's one of the reasons why lateral economics are now predicting, alongside Albo's first home guarantee scheme, the 5% deposit scheme, which I've done other episodes on, this will push prices up nationally between 5.3 and 9.9% in the next 12 months. Now, that's a conservative figure, if you ask me. And there are some places in Australia, for example, southwest Sydney, where only 519 homes are right now under construction compared to what they need, which is 7,335. I'm not even going to try to calculate that percentage because it's an abysmal number. That's why I think so many parts of Australia are going to boom, including the location that I just mentioned. In fact, 77 suburbs, according to ABS, nationwide that were under $500,000 have doubled to $1 million plus in the last decade, according to PropTrack data. This number of suburbs that will double under 500K in the next 10 years, I think is going to actually be more than double or triple. You could see 140 or even 210 suburbs, in my humble opinion, looking at all the data factors, painting a multi-dimensional picture of what's going on. The number of suburbs that will double under 500K to beyond 1 million in the next 5 to 10 years, in my estimation, will be well beyond 140, if not even 210. Those are the ones you want to be investing in. And the rest of the episode, let's go through the data so you can build a thesis for yourself. Let's start with this predicted housing supply out to 2029. This is from Urban Task Force, ABS, and the federal government themselves. So they've split up state by state the target number of homes they want built. This is the government, and the actual number that is predicted, once again, from the government, ABS, and the Urban Task Force. You can see that in New South Wales, only 65% of the required housing supply is likely to be built in the next 4 to 5 years. In Victoria, it's likely actually to be 98%. So good job, Victoria, in terms of their housing supply. Queensland, 79%, WA, 81%, SA, 71%, Tasmania, 51%, ACT, 78%, Northern Territory, 31%, and overall across Australia, only 78% of houses are likely to be actually built of the total number, which is 1.2 million. So the areas which are likely to boom the most are going to be Northern Territory for sure, that are going to be Tasmania at just 51%. And then you're likely to see South Australia continue to do well, Queensland continue to do well. You might see a number like 98% for Victoria and think, hey, that's not going to boom. And I agree. I don't think Victoria at large is going to double in the next 4 to 5 years, but there will be pockets, and there already are, that are growing it by 10 to 20% just in the last year or the last 18 months. So very much comes down to markets within markets for Victoria. Now, I think an incredibly interesting graph here is the average annual house price change between 2010 to 2025. Now, why this is important is traditionally those locations that have performed really well in the last 10 to 20 years tend to underperform in the next 10 to 20 years. So those that have done incredibly well, Adelaide, it's gone up on average almost 8% per annum. Sydney's gone up almost 8% per annum, whereas in the previous decade before that, it didn't. Brisbane, of course, more than 6%, Hobart 6%, Melbourne's right down, Canberra's right down, Perth is right down, and Darwin is actually not grown on a net basis. You triangulate this data with the undersupply data that I just shared, you find that Perth and Darwin had low supply percentages, and they haven't grown in the context of the last 15 years. So they've got a lot of potential. Canberra and Melbourne too. Melbourne doesn't have a huge supply issue like we just learned, but nonetheless, statistical averages are on its side. And Hobart had a huge undersupply as well in the previous chart. And here, yes, it has performed as well, but not as much as Adelaide and Sydney. So make of this what you like, but those cities on the right-hand side, if you look back in 2040 or 2035, these are the locations you'll probably thank yourself for investing in. Of course, Canberra has huge land tax, so you might want to discount it because of that. I'm not saying don't invest in Sydney, like I just mentioned. Southwest Sydney, amazing pocket to invest in right now. There's markets within markets, but this is at a macro city level. And because of these reasons, house price expectations are now even higher than what they were in the COVID boom. The right-hand side axis is an index, and this orange line shows household expectations for house price growth. And this is from Cotality, Macrobond, Melbourne Institute as well. That's the data source. You can see people expect house prices to rise more, or more people expect them to rise than they even did in the 2021 massive boom. This tells us that there's basically zero chance of national house prices falling anytime soon, and that this black line, which is actual house price growth, is likely to catch up to the expectations, which is that they will start growing by between 1 to 2% every single month. Remember, 1 to 2% is 12% annual house price growth. That's a huge number. And you might say, hey, PK, how can people possibly afford this? Like, where's all this money coming from? Well, the reality is that the financial pressure that Australian households face are actually easing, with the Reserve Bank saying that the number of mortgage holders at risk of falling behind on repayments is now less than 1%. This figure has not been this low since 2022, at the start of when interest rates started rising. So those mortgage holders that have a buffer in their mortgage repayments, like they're going to run out of money but have a buffer of just less than 6 months, in the orange, that's falling. That means that mortgage arrears are getting better and better and better. You can see this according to Australian household debt percentage to disposable income. This is from APRA and ABS. Everyone thinks, oh, people are mortgaged to the hilt. But check this out. We're actually at very similar household debt to income levels as we were back in 2018. Yes, that did go up a lot from 2012 to 18, but since that time, despite the huge rate rise cycle, we're pretty much flat. So this huge price boom that housing has experienced over the preceding 5 or 6 years has not come at the expense of burgeoning losses or financial pressure or rising debt per income in Australian households. In fact, what you can see is that Australian mortgage offset account balances have been steadily rising, seasonally adjusted. Every single year, households add to their offset accounts. Offset account is where you have an account which, if you have a mortgage of 500K, and let's say hypothetically you have $500,000 in that offset account, that mortgage is incurring zero interest. If you have an offset account, that is considered by the bank to be a bit like savings, and that is actually going up at a rapid clip. It's not going up any slower than what it used to even before COVID. So this tells us household balance sheets are pretty solid. People have a lot of savings, people have huge buffers. But one thing's for sure, prices are going to rise dramatically, and that this momentum is unlikely to stop in the next 4 to 5 years, out to 2029, 2030. I think there will likely be almost 100 suburbs where the prices have gone up more than 50, if not even 100%. So this is an amazing time to be buying property. All data points towards house price growth. I know this is an unpopular opinion, and those of you who don't own any real estate in Australia, you're praying and wishing and hoping for a crash. It's just not going to come. You don't have to listen to me. These are objective stats, and I've shared thousands of charts in the recent years on my YouTube channel. And basically, 95 to 99% of the time, what I've been saying has been correct. For the sake of all of you who don't own property and think the market will crash, I hope I'm wrong. But let's be realistic. For those of you who do want to own property and are considering should I buy or not, the time to buy was yesterday. And the second best time to buy is right now. Make sure you know where to buy, how to buy, do it with precision, because not all areas are going to grow equally. And I want you to escape the middle class and be on the right side of the haves versus have-nots equation, because also in the next 4 to 5 years, the middle class is going to become completely obliterated. I'll do another episode on that. My name's PK. Hit the subscribe button. To level up, I'll leave a link below to my Facebook group with almost 70,000 people, Australian Property Mastery with PK. Hit the subscribe button. Very thankful for you being part of my community. Thanks, guys.